Rule 65(2) Reappropriation of funds shall be made only when it is known or anticipated that the appropriation for the unit from which funds are to be transferred shall not be utilized in full or that savings can be effected in the appropriation for the said unit. Rule 65(3) Funds shall not be reappropriated from a unit with the intention of restoring the diverted appropriation to that unit when savings become available under other units later in the year. Rule 65(4) An application for reappropriation of funds shall ordinarily be supported by a statement in Form GFR1 or any other special form authorized by departmental regulations showing how the excess is proposed to be met. In all orders sanctioning reappropriation, the reasons for saving an excess of Rs 1 lakh are over in the primary units, secondary units, wherever necessary affected shall be invariably stated. The authority sanctioning the reappropriation shall endorse a copy of the order to the accounts officer. Rule 66 Supplementary Grants. If savings are not available within the grant to which the payment is required to be debited, or if the expenditure is on new service or new instrument of service not provided in the budget, necessary supplementary grant or appropriation in accordance with Article 115(1) of the Constitution shall be obtained before payment is authorized. Refer to Appendix 5. Rule 67(1) Advance from Contingency Fund. When a need arises to incur unforeseen expenditure in excess of the sanctioned grant or appropriation or on a new service not provided in budget and there is not sufficient time for the voting of the supplementary demand and the passing of the connected appropriation bill before close of the financial year, an advance from the contingency fund set up under Article 267(1) of the Constitution shall be obtained before incurring the expenditure. Rule 67(2) An advance from the contingency fund shall also be obtained to meet expenditure in excess of the provisions for the service included in an appropriation vote on account act. Rule 67(3) The application for an advance from the contingency fund shall indicate inter alia the particulars of the additional expenditure involved and the sanction to the advance has also to indicate the subhead in the primary unit of the grant to which the expenditure appropriately relates. In case, however, any difficulty is felt, the matter shall be referred to the Finance Ministry for clarification. Rule 67(4) The procedure for obtaining an advance from the contingency fund and recoupment of the fund shall be as laid down in the Contingency Fund of India Amendment Rules 2021 as amended from time to time. For ready reference, rules have been placed at Appendix 6 to this volume. Note: the Contingency Fund of India Amendment Rules 2021 were published in Extraordinary Gazette of India Vide No. GSR 7218 dated the 4th of October 2021. 1. Rule 68 Inevitable Payments. Act subject to the provisions of Article 114(3) of the Constitution, money indisputably payable by government shall not ordinarily be left unpaid. Suitable provision for anticipated liabilities shall invariably be made in demands for grants to be placed before Parliament. Rule 69 For easy reference an extract relating to procedures followed in the Accounts Office for check against provision of funds as a part of pre-check of bills has been placed at Appendix 10. Rule 70 Duties and Responsibilities of the Chief Accounting Authority. The Secretary of a Ministry Department who is the Chief Accounting Authority of the Ministry Department shall 1. Inserted Vide Dos Om No. 8/18/2021 A. 2. Dated the 6th of May 2022 in view of the OMF. No. 4/13 BSD 2021 dated the 18th of April 2022. 16. Be responsible and accountable for financial management of his ministry or department. Ensure that the public funds appropriated to the ministry or department are used for the purpose for which they were meant. Be responsible for the effective, efficient, economical and transparent use of the resources of the ministry or department in achieving the stated project objectives of that ministry or department, whilst complying with performance standards. Appear before the Committee on Public Accounts and any other parliamentary committee for examination. Review and monitor regularly the performance of the programs and projects assigned to his ministry to determine whether stated objectives are achieved. Be responsible for preparation of expenditure and other statements relating to his ministry or department as required by regulations, guidelines or directives issued by Ministry of Finance. Shall ensure that his ministry or department maintains full and proper records of financial transactions and adopts systems and procedures that shall at all times afford internal controls. Shall ensure that his ministry or department follows the government procurement procedure for execution of works, as well as for procurement of services and supplies, and implements it in a fair, equitable, transparent, competitive and cost-effective manner. Shall take effective and appropriate steps to ensure his ministry or department A. Collects all monies due to the government, and B. Avoids unauthorized, irregular and wasteful expenditure. (17) Ch. -4 Government accounts. Rule 71 Preparation and presentation of accounts. Accounts of the Union Government shall be prepared every year showing the receipts and disbursements for the year, surplus or deficit generated during the year, and changes in government liabilities and assets. The accounts shall be prepared by Controller General of Accounts, certified by the Controller and Auditor General of India, and along with the report of the Controller and Auditor General of India on these accounts, shall be submitted to the President of India, preferably within 6 months of close of the financial year, who shall cause them to be laid before each House of Parliament. Parliament. Rule 72 Form of accounts. By virtue of the provisions of Article 150 of the Constitution, the accounts of the Union Government shall be kept in such form as the President may, on the advice of the Controller and Auditor General of India, prescribe. The Controller General of Accounts in the Ministry of Finance, Department of Expenditure, is responsible for prescribing the form of accounts of the Union and States, and to frame, or revise, rules and manuals relating thereto on behalf of the President of India in terms of Article 150 of the Constitution of India, on the advice of the Controller and Auditor General of India. Rule 73 Principles of Accounting. The main principles according to which the accounts of the Government of India shall be maintained are contained in Government Accounting Rules, 1990. Accounting Rules for Treasuries. And Account Code Volume A. Detailed rules and instructions relating to the forms of the initial and subsidiary accounts to be kept and rendered by officers of the Department of Posts and other technical departments are laid down in the respective accounts manuals or in the departmental regulations relating to the departments concerned. Rule 74 Cash-based accounting. Government accounts shall be prepared on cash basis, with the exception of such book adjustments as may be authorized by Government Accounting Rules, 1990, or by any general or special order issued by the central government on the advice of the Controller and Auditor General of India. The transactions in government accounts shall represent the actual cash receipts and disbursements during a financial year as distinguished from amounts due to or by government during the same period. Rule 75 Period of accounts. The annual accounts of the central government shall record transactions which take place during a financial year running from the 1st of April to the 31st of March thereof. Rule 76 Currency in which accounts are kept. The accounts of government shall be maintained in Indian rupees. All foreign currency transactions and foreign aid shall be brought into account after conversion into Indian rupees. Rule 77 Main divisions and structure of accounts. The accounts of government shall be kept in 3 parts: Consolidated Fund Part 1, Contingency Fund Part 2, and Public Account Part 3. Part 1 Consolidated Fund is divided into 2 divisions, namely, Revenue and Capital divisions. The Revenue division comprises the following sections: Receipt Heads Revenue account dealing with the proceeds of taxation and other receipts classified as revenue in the section; Expenditure Heads Revenue account dealing with the revenue expenditure met therefrom. The Capital division comprises 3 sections, viz. Receipt Heads Capital Account, Expenditure Heads Capital Account, and Public Debt, Loans and Advances, etc. These sections are in turn divided into sectors such as General Services, Social and Community Services, Economic Services, etc., under which specific functions or services are grouped corresponding to the sectors of classification in which are represented by major heads comprising sub-major heads wherever necessary. In Part 2 Contingency Fund are recorded transactions connected with the contingency fund set up by the Government of India under Article 267 of the Constitution or Section 48 of Government of Union Territories Act, 1963. There shall be a single major head to record the transactions thereunder, which will be followed by minor, sub and or detailed heads. In Part 3 Public Account transactions relating to debt other than those included in Part 1 Reserve funds, deposits, advances, suspense, remittances and 18. Cash balances shall be recorded. Rule 78 Classification of transactions in government accounts. As a general rule, classification of transactions in government accounts shall have closer reference to functions, programs and activities of the government and the object of revenue or expenditure, rather than the department in which the revenue or expenditure occurs. Major heads comprising sub-major heads wherever necessary are divided into minor heads. Minor heads may have a number of subordinate heads, generally known as subheads. The subheads are further divided into detailed heads followed by object heads. The major heads of account, falling within the sectors for expenditure heads, generally correspond to functions of government, while the minor heads identify the programs undertaken to achieve the objectives of the functions represented by the major head. The subhead represents schemes, the detailed head denotes sub-scheme, and object head represent the primary unit of appropriation showing the economic nature of expenditure such as salaries and wages, office expenses, travel expenses, professional services, grants and aid, etc. The above 6 tiers are represented by a unique 15-digit numeric code. Rule 79 Authority to open a new head of account. The list of major and minor heads of accounts of Union and States is maintained by the Ministry of Finance, Department of Expenditure, Controller General of Accounts, which is authorized to open a new head of account on the advice of the Controller and Auditor General of India under the powers flowing from Article 150 of the Constitution. It contains general directions for opening heads of accounts and a complete list of the sectors, major, sub-major and minor heads of accounts, and also some sub-detailed heads, authorized to be so opened. Ministries, departments may open subheads and detailed heads as required by them in consultation with the Budget Division of the Ministry of Finance. Their principal accounts officers may open sub-detailed heads required under the minor heads falling within the Public Account of India subject to the above stipulations. The object heads have been prescribed under Government of India's orders below Rule 8 of Delegation of Financial Power Rules. The power to amend or modify these object heads and to open new object heads rest with Department of Expenditure of Ministry of Finance on the advice of the Controller and Auditor General of India. Rule 80 Conformity of budget heads with rules of classification. Budget heads exhibited in estimates of receipts and expenditure framed by the government or in any appropriation order shall conform to the prescribed rules of classification. Rule 81 Responsibility of departmental officers. Every officer responsible for the collection of government dues or expenditure of government money shall see that proper accounts of the receipts and expenditure, as the case may be, are maintained in such form as may have been prescribed for the financial transactions of government with which he is concerned, and tender accurately and promptly all such accounts and returns relating to them as may be required by government, controlling officer or accounts officer, as the case may be. Rule 82 Classification should be recorded in all the bills and challans by drawing officers. Suitable classification shall be recorded by drawing officers on all bills drawn by them. Similarly, classification on challans crediting government money into the bank shall be indicated or recorded by departmental officers responsible for the collection of government dues, etc. In cases of doubt regarding the head under which a transaction should be accounted, the matter shall be referred to the principal accounts officer of the ministry department concerned for clarification of the Ministry of Finance and the Controller General of Accounts, wherever necessary. Rule 83 Charged or voted expenditure. The expenditure covered under Article 1123 of the Constitution of India is charged on the Consolidated Fund of India and is not subject to vote by the legislature. All other expenditure met out of the Consolidated Fund of India is treated as voted expenditure. Charged or voted expenditure shall be shown separately in the accounts as well as in the budget documents. Rule 84 Capital or revenue expenditure. Significant expenditure incurred with the object of acquiring tangible assets of a permanent nature for use in the 19th organization and not for sale in the ordinary course of business or enhancing the utility of existing assets, shall broadly be defined as capital expenditure. Subsequent charges on maintenance, repair, upkeep and working expenses, which are required to maintain the assets in a running order, is also all other expenses incurred for the day-to-day running of the organization, including establishment and administrative expenses, shall be classified as revenue expenditure. Capital and revenue expenditure shall be shown separately in the accounts. Rule 85 Banking arrangements. The Reserve Bank of India (RBI) shall be the banker to the government. It shall maintain cash balance of the government and provide banking facilities to the ministries and subordinate or attached offices either directly through its own offices or through its agent banks. For this purpose, RBI shall, in consultation with the Controller General of Accounts, nominate a bank to function as accredited bank of a ministry or department. Pay and accounts officers and check drawing and disbursing officers shall have assignment accounts with the identified branches of the accredited bank of the ministry. All payments shall be made through these identified bank branches. These branches shall also collect departmental and other receipts. Tax revenues of the government shall be collected by the RBI through its own offices or through the nominated branches of its agent banks. Note: Detailed procedure to be followed for remittance of government receipts into government cash balance and reimbursement of payments made on behalf of government by the banks are laid down in the Memoranda of Instructions issued by the Reserve Bank of India. Rule 86 Public Financial Management System (PFMS). 1. Public Financial Management System (PFMS), an integrated financial management system of Controller General of Accounts, Government of India, shall be used for sanction preparation, bill processing, payment, receipt management, direct benefit transfer, fund flow management and financial reporting. 2. All the ministries sanctioning grant and aid shall register all implementing agencies till last level of implementation on PFMS to track fund flow and unspent balances. 3. All the payment, to the extent possible, shall be released, just in time, by the ministries through PFMS. 4. Detailed demand for grants DDG as approved, must be uploaded on PFMS at the start of each financial year. 5. All the reappropriation orders, surrender orders shall be generated through PFMS system. 6. All grantee institutions shall submit utilization certificates on PFMS. Rule 87 Direct Benefit Transfer. 1. Transfer of benefits should be done directly to beneficiaries under various government schemes and programs using Information and Communication Technology (ICT). Necessary process reengineering to minimize intermediary levels and to reduce delay in payments to intended beneficiaries with the objective of minimizing pilferage and duplication should be done for all government schemes and programs. The process for implementation of DBT as prescribed should be adopted. 2. DBT should include in-kind and cash transfers to beneficiaries as well as transfers honorariums given to various enablers of government schemes like community workers, etc. for successful implementation of the schemes. 3. Transfer of cash benefits from ministries' departments should be done A. directly to beneficiaries from ministries' departments, B. through state treasury account, or C. through any implementing agency as appointed by central state governments. 4. In-kind transfer to individual beneficiary. Household service provider includes schemes or components of schemes where in-kind benefits are given by the government or through any implementing agency as appointed by central state governments to individual 20. Beneficiary household service providers. 5. Ministries departments will use PFMS platform for processing of payments for cash in-kind transfers to individual beneficiaries as per framework laid down by Department of Expenditure, Ministry of Finance. 6. Implementing agencies shall generate electronic utilization certificate on PFMS portal and submit them online. EUCs shall be used to certify that money was actually utilized for the purpose for which it was sanctioned to eliminate the need for physical generation of UCs. 7. Transaction charges for the financial intermediaries facilitating DBT payments shall be paid as stipulated by Ministry of Finance. 2. Annual accounts. Rule 88 Appropriation accounts. Appropriation accounts of central ministries other than Ministry of Railways and of central civil departments excluding Department of Posts and Defence Services shall be prepared by the principal accounts officers of the respective ministries and departments under the guidance and supervision of the Controller General of Accounts and signed by their respective chief accounting authorities, i.e., the secretaries in the concerned ministries or departments. Union Government Appropriation Accounts civil required to be submitted to Parliament shall be prepared annually by the Controller General of Accounts by consolidating the aforesaid appropriation accounts. Appropriation accounts pertaining to Departments of Posts and Defence Services shall be prepared and signed by the Secretaries to the Government of India in the Department of Posts and Ministry of Defence respectively and that of Ministry of Railways by the Chairman, Railway Board. Rule 89 Finance Accounts. Annual accounts of the Government of India including transactions of Department of Posts and Ministries of Defence and Railways and transactions under Public Account of India of Union Territory Governments showing under the respective heads the annual receipts and disbursements and statement of balances for the purpose of the Union. Called finance accounts, shall be prepared and signed by the Controller General of Accounts countersigned by the Secretary Expenditure Ministry of Finance. Rule 90 Presentation of Annual Accounts. The appropriation and finance accounts mentioned above shall be prepared by the respective authorities on the dates mutually agreed upon with the Controller and Auditor General of India, in the forms prescribed by the President on the advice of the Controller and Auditor General of India and sent to the latter for recording his/her certificate. The certified annual accounts and the reports relating to the accounts shall be submitted by the Controller and Auditor General of India to the President in accordance with the provisions of Section 11 of the Controller and Auditor General's Duties, Powers and Conditions of Service Act, 1971 and Clause 1 of Article 151 of the Constitution of India. Rule 91 Administrative ministries PSUs subordinate statutory autonomous bodies may have financial stakes in public-private partnerships PPP. Production sharing contracts PSCs. Joint ventures JVs. Subsidiary companies etc. In such case, details of the financial stakes of the government or other entities mentioned above should be disclosed in the annual report of the Administrative Ministry. 3. Pro forma accounts. Rule 92 Subsidiary accounts of government departments undertaking commercial activities. Where the operations of certain government departments working on a commercial or quasi-commercial basis, e.g., an industrial factory or a store, cannot be suitably brought within the cash-based government accounting system, the head of the units shall be required to maintain such subsidiary pro forma accounts in commercial form as may be agreed between government and Controller and Auditor General of India. This includes the maintenance of suitable manufacturing, trading, profit and loss accounts and balance sheet. Rule 93 Methods and principles on which subsidiary accounts in commercial form are to be kept. The methods and principles in accordance with which subsidiary and pro forma accounts in commercial form are to be kept shall be regulated by orders and instructions issued 21 by government in each case. Note 1. Pro forma accounts of regular government workshops and factories shall be kept in accordance with the detailed rules and procedure prescribed in the departmental regulations. Pro forma accounts relating to public works shall be prepared by the accounts officers in accordance with the instructions contained in Account Code for Accountants General. Note 2. The heads of account which should, as far as possible, be common to the government accounts and the general ledger maintained by a commercial undertaking, shall be selected with due regard to the principles of governmental and commercial accounting so that the monthly classified account of income and expenditure of the undertaking may be prepared readily from the general ledger maintained by it. Rule 94 Adequate regulations to be framed to ensure cost deduced is accurate and true. Where commercial accounts are maintained for the purpose of assessment of the cost of an article or service, the head of the unit shall ensure that adequate regulations are framed with the approval of government in order to ensure that the cost deduced from the accounts is accurate and true. Rule 95 Maintenance and submission of subsidiary accounts and statements by department units. The head of the unit shall arrange to obtain the orders of government regarding the nature and form of subsidiary accounts and statements, if any. Such accounts and statements shall be submitted to the accounts officer on such date as may be required by him. The same shall be appended to the appropriation accounts of each year. IV. Personal deposit accounts. Rule 96 Personal deposit account. Personal deposit account is a device intended to facilitate the designated officer thereof to credit receipts into and effect withdrawals directly from the account, subject to an overall check being exercised by the bank in which the account is authorized to be opened. The designated officer shall ensure with the help of a personal ledger account to be maintained by the bank for the purpose that no withdrawal will result in a minus balance therein. Only government officers acting in their official or any other capacity shall be the designated officer thereof. Rule 97 1. Authority to open personal deposit account. The personal deposit account shall be authorized to be opened by a special order by the concerned ministry or department in consultation with the Controller General of Accounts. Such special order or permission shall be issued or granted by the ministry or department concerned after it is satisfied that the initial accounts of the monies to be held in a personal deposit account and disbursed shall be arranged to be maintained properly and shall be subject to audit. Every personal deposit account so authorized to be opened shall form part of the government account and be located in the public account thereof. The provisions relating to personal deposit account are contained in Para 16.7 of Civil Accounts Manual and Rule 191 to 194 of Central Government Account Receipts and Payments Rules. Rule 97 2. Personal deposit accounts shall generally be authorized to be opened in the following types of cases. A. In favor of a designated officer appointed for the purpose of administering monies tendered by or on behalf of wards and attached estates under government management. It shall also be ensured that proper arrangements are made for the maintenance and audit of connected initial accounts. B. In relation to civil and criminal courts deposits, in favor of the chief judicial authority concerned. C. Where, under certain regulatory activities of the government, receipts are realized and credited to a fund or account under the provisions of an act to be utilized towards expenditure thereunder and no outgo from the consolidated fund is involved. D. Where a personal deposit account is required to be created by a law or rules having the force of law and certain liabilities devolve on the government out of the special enactments. A. Officers commanding units and others concerned in the administration of public funds in the defense departments can be authorized to open personal deposit accounts for such funds. 22. V. Capital and revenue accounts. Rule 98 Capital Expenditure. Significant expenditure incurred with the object of acquiring tangible assets of a permanent nature for use in the organization and not for sale in the ordinary course of business or enhancing the utility of existing assets, shall broadly be defined as capital expenditure. Subsequent, charges on maintenance, repair, upkeep and working expenses, which are required to maintain the assets in a running order as also all other expenses incurred for the day-to-day running of the organization, including establishment and administrative expenses, shall be classified as revenue expenditure. Capital and revenue expenditure shall be shown separately in the accounts. Expenditure on a temporary asset or on grants in aid cannot ordinarily be considered as a capital expenditure and shall not, except in cases specifically authorized by the President on the advice of the Controller and Auditor General of India, be debited to a capital head. Capital expenditure is generally met from receipts of capital nature, as distinguished from ordinary revenues derived from taxes, duties, fees, fines and similar items of current income including extraordinary receipts. It is open to the government to meet capital expenditure from ordinary revenues, provided there are sufficient revenue resources to cover this liability. Expenditure of a capital nature is defined above, shall not be classed as capital expenditure in the government accounts unless the classification has been expressly authorized by general or special orders of government. Expenditure of a capital nature shall be distinguished from the revenue expenditure both in the budget estimates and in government accounts. Accounts. Rule 99 Principles for allocation of expenditure between capital and revenue. The following are the main principles governing the allocation of expenditure between revenue and capital. A. Capital shall bear all charges for the first construction and equipment of a project as well as charges for intermediate maintenance of the work while not yet open for service. It shall also bear charges for such further additions and improvements which enhance the useful life of the asset, as may be sanctioned under rules made by competent authority. B. Subject to clause C below, revenue shall bear subsequent charges for maintenance and all working expenses. These embrace all expenditure on the working and upkeep of the project and also on renewals and replacements and additions, improvements or extensions that are revenue in nature as per rules made by government. C. In the case of works of renewal and replacement, which partake expenditure both of a capital and revenue nature, the allocation of expenditure shall be regulated by the broad principle that revenue should pay or provide a fund for the adequate replacement of all wastage or depreciation of property originally provided out of capital grants. Only the cost of genuine improvements, which enhance the useful life of the asset whether determined by prescribed rules or formulae, or under special orders of government, may be debited to capital. Where under special orders of government, a depreciation or renewals reserve fund is established for renewing assets of any commercial department or undertaking, the distribution of expenditure on renewals and replacements between capital and the fund shall be so regulated as to guard against overcapitalization on the one hand and excessive withdrawals from the fund on the other. D. Expenditure on account of reparation of damage caused by extraordinary calamities such as flood, fire, earthquake, enemy action, etc. shall be charged to capital, or to revenue, or divided between them, depending upon whether such expenditure results in creation, acquisition of new assets or whether it is only for restoring the condition of the existing assets, as may be determined by government according to the circumstance of 23. Each case. A. Expenditure on a temporary asset cannot ordinarily be considered as a capital expenditure and shall not, except in cases specifically authorized by the President on the advice of the Controller and Auditor General of India, be debited to a capital head. Rule 100 Allocation between capital and revenue expenditure. The allocation between capital and revenue expenditure on a capital scheme for which separate capital and revenue accounts are to be kept, shall be determined in accordance with such general or special orders as may be prescribed by the government after consultation with the Controller and Auditor General of India. Rule 101 Capital receipts during construction mainly to be utilized in reduction of capital expenditure. Capital receipts insofar they relate to expenditure previously debited to capital accruing during the process of construction of a project, shall be utilized in reduction of capital expenditure. Thereafter their treatment in the accounts will depend on circumstances, but except under special rule or order of government, they shall not be credited to the revenue account of the department or undertaking. Rule 102 Receipts and recoveries representing recoveries of expenditure previously debited to capital major head. Receipts and recoveries on capital account insofar as they represent recoveries of expenditure previously debited to a capital major head shall be taken in reduction of expenditure under the major head concerned except where, under the rules of allocation applicable to a particular department, such receipts have to be taken to revenue. Rule 103 Conversion of outstanding loans into equity investments or grants in aid. Government takes from time to time suitable measures to strengthen and restructure the capital base of public sector enterprises so that these enterprises can improve their performance and productivity. As a part of the package scheme, financial relief in the form of conversion of outstanding loans into equity investments or grants in aid are also agreed to. Where loans outstanding against public sector undertakings are proposed to be converted into equity investments in or as grants in aid to the public sector undertakings, the approval of the Parliament to such proposals shall be obtained by including a token provision in the relevant demands for grants or supplementary demands for grants as may be found expedient. The details of such conversion of loans may be explained in the relevant budget supplementary demand documents. After obtaining the approval of the Parliament, the balances under loans and the progressive expenditure of the capital heads of accounts shall be corrected pro forma in the relevant accounts of the Union Government, under the loan capital major heads concerned. Interest on capital. Rule 104 Interest rate. Except in special cases regulated by special orders of government, interest at such rates as may be specified from time to time shall be charged in the accounts of all commercial departments or units for which separate capital and revenue accounts are maintained within the government accounts. Rule 105 Charging of interest on capital outlay met out of specific loans raised by government. For capital outlay met out of specific loans raised by government, the interest shall be charged at such rate as may be prescribed by government, having regard to the rate of interest actually paid on such loans and the incidental charges incurred in raising and managing them. By specific loans are meant loans that are raised in the open market for one specific purpose which is clearly specified in the prospectus and in regard to which definite information is given at the time of raising of the loans. Rule 105 For capital outlay provided otherwise, interest shall be charged at the rate of interest to be determined each year by the Department of Economic Affairs, Ministry of Finance. Rule 106 Method of calculation of interest. The interest shall be calculated on the direct capital outlay at the end of the previous year plus half the outlay of the year itself, irrespective of whether such outlay has been met from current revenues or from other sources. Rule 107 How interest charged to capital is to be written back. When under any special 24 orders of government, charges for interest during the process of construction of a project are temporarily met from capital, the writing back of capitalized interest shall form the first charge on any capital receipts or surplus revenue derived from the project when opened for working. 7. Adjustment with government departments etc. Rule 108 Adjustments with state governments. Subject to the relevant provision of the Constitution or of law made by Parliament or any orders issued thereunder, adjustments in respect of financial transactions with state governments shall, unless otherwise provided for, be made in such manner, and to such extent as may be mutually agreed upon between the central government and the state government concerned. However, adjustments with state government in respect of the matters mentioned below shall be regulated by the rules contained in Appendix 5 to the Government Accounting Rules, 1990. The rules are based on reciprocal arrangements made with the state governments and are, therefore, binding on all of them, pay and allowances, other than leave salaries. Leave salaries. Pensions. IV. Expenditure involved in audit and keeping accounts. Cost of police functions on railways including the cost of protecting railway bridges. Cost of forest surveys carried out by the Survey of India, and forest maps prepared by that department. Leave salary and pension contributions recovered in respect of government servants lent on foreign service. Rule 109 Re-audit. As a convention, a period of 3 years has been accepted by the central and state governments for the re-audit of past transactions involving errors in classification. Rule 110 When adjustment necessary. Adjustment shall always be made unless otherwise agreed upon. A. If a commercial department or undertaking or a regularly organized store department or store section of a department is concerned, or b. If under the operation of any rule or order, an adjustment would have been made if the particular transaction with state government were a transaction between two departments of the central government. Rule 111 Petty and isolated claims for services rendered not to be preferred. The central government, which includes union territories, and the state governments have agreed under reciprocal arrangements not to prefer petty and isolated claims for an amount not exceeding Rs 10,000 against one another. Rule 112 Criteria in determining whether a particular claim is covered by the reciprocal arrangement. The significant criterion in determining whether a particular claim is covered by the reciprocal arrangement mentioned above, will be that the claim shall be both petty and of an occasional character and shall cover services rendered and not supplies made unless the latter forms part of service. The term, service rendered, will be taken to mean an individual act of service, like providing police escort to a high dignitary, and will not apply to supply of stores etc. Claims relating to commercial undertakings under the Government of India or the state governments such as those of the railways, the Department of Post, the electrical undertakings, etc. shall fall outside the purview of the proposed reciprocal arrangements and shall continue to be settled as hitherto. If a doubt arises as to whether a particular claim would fall within or outside the purview of the proposed arrangement, it shall be decided by mutual consultation. The above arrangements will remain in force without any time limit in respect of all state governments. Rule 113 Projects jointly executed by several state governments. In the case of projects, jointly executed by several governments, where the expenditure is to be shared by the participating governments in agreed proportions, but the expenditure is ab initio incurred by one government and shares of other participating governments recovered subsequently. Such recoveries from other governments shall be exhibited as abatement of charges under the relevant 25. Expenditure head of account in the books of the governments incurring the expenditure initially. Rule 114 Claims of state governments on account of the extra cost of agency functions. Claims of state governments, on account of the extra cost of agency functions entrusted to them under Article 258 of the Constitution, shall be dealt with and settled in accordance with such directions as may be issued by the President in this regard from time to time. Rule 115 The following principles shall be generally observed in dealing with claims preferred by state governments under Clause 3 of Article 258 of the Constitution. If the agency work involves the employment of a state commercial department, it would be open to that department to charge its normal commercial costs. Public Works Department agency costs shall be represented by such percentage charges on the cost of central works executed by the state as may be agreed between the central and the state government concerned, works outlay being treated as an amount placed at the disposal of the state government for actual expenditure on the execution of the work. The cost of regular joint establishments shall be shared as far as practicable on the basis of fixed annual sums settled in agreement with the state government concerned. In other cases, the following procedure shall be adopted unless there are special orders to the contrary. A. Details of claims preferred by state governments shall be ascertained. B. If the work has been performed by the state government in the past, the charges shall be compared with those charged in the past, but it is not necessary to be meticulous in the matter. C. If the charges are found to be reasonable and do not exceed Rs 50,000 per annum for any individual item or connected group of items, a 5 years contract shall be offered to the state government during which the central government would pay the fixed sum per annum for the work. The amount will be subjected to review at the end of each period of 5 years. D. If the amount agreed upon exceeds Rs 50,000, it shall be necessary to have an annual statement of proposed charges from the state government at the time of preparation of the budget. However, if in any individual case, the charges are obviously static, then the contract system may be adopted in these cases also. In exceptional cases in which arbitration has to be resorted to, the Ministry of Finance will make the requisite arrangement in the matter. The Ministry of Finance shall be consulted on all matters arising under Article 258(3) of the Constitution. Rule 116 Principles governing transactions in connection with the agency functions entrusted to state government. The following procedure shall be followed in regard to transactions arising in connection with the agency functions entrusted to the state governments under Article 258 of the Constitution. The expenditure on extra staff or contingencies which the state government have to incur, the extra cost to the state government arising mainly in respect of the additional staff employed or contingent and other expenditure, as in the case of work devolving on the state governments in connection with the administration of the Census Act, is reimbursable under Article 258(3) of the Constitution. Expenditure in this regard shall be provided in the state budget in the first instance and adjusted in the accounts of the state governments under the normal heads of accounts. These will be reimbursed in lump sum to 26. The state governments, necessary provision being made under a distinct subhead, amounts paid to other governments, departments, etc. under the concerned demand of the ministry administratively concerned with the subject. In computing the extra cost, the element of leave and pensionary charges can also be included, provided the relevant service and financial rules of the state governments provide for this. The expenditure on work entrusted to the state government, such as expenditure on construction and maintenance of national highways, expenditure on defense works, aviation works, etc. The expenditure directly connected with the execution of the scheme or work entrusted to the state government, such as expenditure on the construction or maintenance of national highways etc., will be adjusted direct in the accounts of the central government under the relevant head of account. The question of including the estimates in this regard in the budget of the state governments and subjecting them to the vote of the state legislature will not arise. The expenditure will be adjusted under the head 8658 Suspense Account Spouse Suspense in the remittance section of the state accounts in the first instance, pending their eventual clearance in accordance with the prescribed procedure. Note: in the converse case relating to the entrustment of a state function to the central government under Article 258A of the Constitution, a procedure similar to that indicated in the Rule 116 above shall be followed. The extra cost on staff and other contingent expenditure, etc., will accordingly have to be provided in the budget of the central government in the usual manner and recovery made in lump sum from the state government concerned. The other expenditure on execution of the work proper should be debited to the state government concerned directly, and the question of obtaining a vote of the Parliament for the same will not arise. Rule 117 Crucial date for closure of intergovernmental adjustments. Intergovernmental adjustments can be carried out up to the 15th of April, on which date the books of the Reserve Bank are closed for the month of March. Every endeavor must, therefore, be made to settle as far as possible all transactions with state governments before the close of the year. Rule 118 Adjustments with foreign governments, outside bodies, etc. Unless exempted by government by general or special orders, services shall not be rendered to any foreign government or non-government body or institution or to a separate fund constituted as such except on payment. Rule 119 Recoveries of expenditure for services rendered to non-government parties. Recoveries of expenditure for services rendered or supplies made to non-government parties or other governments, including local funds and governments outside India, shall in all cases be classified as receipts of the government rendering such services. Rule 120 Recoveries of expenditure for services rendered as an agent. When a government undertakes a service merely as an agent of a private body, the entire cost of the service shall be recovered from that body so that the net cost to government is nil. The recoveries shall be taken as reduction of expenditure. Explanation: the term recovery is used in these rules to denote repayment of, or payment by non-government parties or other governments towards charges initially incurred and classified by a central government department in the account, as final expenditure by debit to a revenue or capital head of account. Recoveries towards establishment charges, tools and plants, fees for procurement of inspection of stores or both etc. affected at percentage rates or otherwise, are some examples. Rule 121 Payments to outside body or fund to be through grant and aid. Any relief in respect of payment for services rendered or supplies made to any outside body or fund shall ordinarily be given through a grant and aid rather than by remission of dues. Rule 122 Charges relating to the maintenance and demarcations and disputes over boundaries. The incidence of charges relating to the maintenance and demarcations and disputes over boundaries between India and a foreign 27 country is regulated by the following principles. Maintenance: half the maintenance charges will be borne by the central government, the other half being recovered, as far as practicable, from the foreign country, failing which the foreign country's share will also be borne by the central government. Demarcation and disputes: charges relating to demarcation of boundaries and boundary disputes will be borne by the central government under entry 10 of the Union List, subject to such recovery as shall be made from the foreign country. Where streams or other watercourses form the boundaries and where the ordinary principle of median line applies, the government concerned, i.e., foreign country or India, will bear the cost of maintenance of the boundary line on its side. Where a separate set of survey marks is maintained by each of the two governments on its side, the cost of maintenance of the survey marks shall be borne by the government concerned. Exception A. The arrangement in I above in its application to Nepal will be subject to special arrangements worked out in consultation with the Nepal government. B. The share of the Bhutan government for maintenance and demarcation of disputes over boundaries will be borne by the central government for the present. 8. Interdepartmental adjustments. Rule 123 Interdepartmental adjustments. Save is expressly provided by any general or special orders, a service department shall not charge other departments for services rendered or supplies made which falls within the class of duties for which the former department is constituted. However, a commercial department or undertaking shall ordinarily charge and be charged for any supplies made and services rendered to, or by, other departments of government. Rule 124 Principles for Division of Departments for purposes of interdepartmental payments. For purposes of interdepartmental payments, the departments of a government shall be divided into service departments and commercial departments according to the following principles. Service departments. These are constituted for the discharge of those functions which either a. are inseparable from and form part of the idea of government, e.g. departments of administration of justice, jails, police, education, medical, public health, forest, defense, or b. are necessary to, and form part of, the general conduct of the business of government, e.g. departments of survey, government printing, stationery, public works, building and roads branch, Central Purchase Organization, Director General of Supplies and Disposals, New Delhi. Commercial departments or undertakings. These are established mainly for the purposes of rendering services or providing supplies, of certain special kinds, on payment for the services rendered or for the articles supplied. They perform functions, which are not necessarily governmental functions. They are required to work to a financial result determined through accounts maintained on commercial principles. Rule 125 Period for preferment of claims. All claims shall ordinarily be preferred between departments, both commercial and non-commercial of the central government, within the same financial year and not beyond 3 years from the date of transaction. This limitation, however, may be waived in specific cases by mutual agreement between the departments concerned. Rule 126 Procedure for settlement of interdepartmental adjustments. The settlement of interdepartmental 28 adjustments shall be regulated by the directions contained in Chapter 4 of Government Accounting Rules, 1990. Rule 127 Interdepartmental and other adjustments to be made in the account year. Under the directions contained in the Account Code for Accountants General, interdepartmental and other adjustments are not to be made in the accounts of the past year, if they could not have been reasonably anticipated in time for funds being obtained from the proper authority. In all cases, where the adjustment could have reasonably been anticipated as, for example, recurring payments to another government or department and payments which, though not of fixed amount, are of a fixed character, etc. The accounts officer will automatically make the adjustment in the accounts before they are finally closed. The onus of proving that the adjustments could not have been reasonably anticipated should lie with the controlling officer. As between different departments of the same government, the recoveries effected for services rendered shall be classified as deductions from the gross expenditure. However, recoveries made by a commercial department, e.g., railways, posts or departmental commercial undertaking in respect of services rendered in pursuance of the functions for which the commercial department is constituted shall be treated as receipts of the department, but where it acts as an agent for the discharge of functions not germane to the essential purpose of the department, the recoveries shall be taken as reduction of expenditure. Exception: recoveries of fees for purchase, inspection, etc. affected by the Central Purchase Organizations of Government of India, are treated as receipts of the department concerned. Note 1. The term recovery is used in this rule to denote repayment of or payment by one department of the same government towards charges initially incurred and classified by another department in its accounts as final expenditure by debit to a revenue or capital head of account. Recoveries towards establishment charges, tools and plants, fees for procurement or inspection of stores or both, etc. affected at percentage rates or otherwise, are some examples. Note 2. Recoveries affected from another department of the same government which are to be classified as deduction from the gross expenditure, shall be shown in the relevant demand for grant as below the line, recovery under the appropriate major head of account etc. Recovery actually affected, irrespective of the year to which it relates, shall be adjusted in accounts in the schedule of recovery to be attached to the appropriation account of the year in which the recovery is affected. Rule 128 Adjustment of pensionary charges of certain commercial departments. Except as otherwise provided, the pensionary liability of commercial departments and undertakings, for which pro forma commercial accounts are maintained, shall be assessed on a contribution basis at such rates as may be fixed by government from time to time. In the case of departments and undertakings, for which no regular commercial accounts are maintained either within or outside the regular government accounts but which are allowed to charge for their products or services rendered, the pensionary liability shall be taken into account in the estimate of overhead charges and manufacturing costs for the purpose of calculating the issue price of goods manufactured or fees for services rendered. The calculation shall be made at rates prescribed for the purpose by government. Note: the railways, posts and defense departments are regarded as separate governments for the purpose of adjustment of pensionary charges. Rule 129 Pensionary liability in the case of government departments undertakings declared as commercial. In the case of government departments and undertakings declared as commercial, adjustment of pensionary liability shall be made in the regular accounts by charging the average of the percentage for 15th year of service based on the rates of monthly contribution of pension as prescribed in the appropriate order issued from time to time under Appendix 2 of Fundamental and Supplementary Rules. 29. Ch. -5 Works. Rule 130 Original works means all new constructions, site preparation, additions and alterations to existing works, special repairs to newly purchased or previously abandoned buildings or structures, including remodeling or replacement. Minor works mean works which add capital value to existing assets but do not create new assets. Repair works means works undertaken to maintain building and fixtures. Works will also include services or goods incidental or consequential to the original or repair works. Rule 131 Administrative control of works includes I. Assumption of full responsibility for construction, maintenance and upkeep. E. Proper utilization of buildings and allied works. E. Provision of funds for execution of these functions. Rule 132 Powers to sanction works. The powers delegated to various subordinate authorities to accord administrative approval, sanction expenditure and reappropriate funds for works are regulated by the Delegation of Financial Powers Rules and other orders contained in the respective departmental regulations. Rule 133(1) A ministry or department at its discretion may directly execute repair works estimated to cost up to Rs 30 lakhs after following due procedure indicated in Rule 139, 159 and 160. Rule 133(2) A ministry or department may, at its discretion, assign repair works estimated to cost above Rs 30 lakhs and original, minor works of any value to any public works organization, such as Central Public Works Department (CPWD), State Public Works Department, other central government organizations authorized to carry out civil or electrical works such as Military Engineering Service (MES), Border Roads Organization (BRO), etc. A ministry department's construction wings of Ministries of Railways, Defence, Environment and Forests, Information and Broadcasting and Departments of Posts and Space etc. Rule 133(3) As an alternative to 133(2), a ministry or department may award repair works estimated to cost above Rs 30 lakhs and original works of any value to I. Any public sector undertaking set up by the central or state government to carry out civil or electrical works, or E. to any other central, state government organization (PSU) which may be notified by the Ministry of Urban Development (MoD) for such purpose after evaluating their financial strength and technical competence. For the award of work under this sub-rule, the ministry department shall ensure competition among such PSUs organizations. This competition shall be essentially on the lump sum service charges to be claimed for execution of work. In exceptional cases, for award of work under I and E above, on nomination basis, the conditions contained in Rule 194 would apply. The work under these circumstances shall also be awarded only on the basis of lump sum service charge. Note: Scientific Ministries departments can assign repair works estimated to cost up to 5 crore rupees on nomination basis even in normal cases. These instructions will be applicable up to 3 years from the date of issue of the SOM. Thereafter, review will be made by Department of Expenditure to decide on further extension of these powers. 2. Rule 134 Work under the administrative control of the Public Works Departments. Works not specifically allotted to any ministry or department shall be included in the grants for civil works to be administered by Central Public Works Department. No such work may be financed partly from funds provided in departmental budget and partly from the budget for civil works as mentioned above. Rule 135(1) General Rules. Subject to the observance of these general rules, including Rule 144, the initiation, authorization and execution of works allotted to a particular ministry or department shall be regulated by detailed 2. Inserted vide do omno. F. 2042-2021 PPD dated 1 September 2021. The scientific ministries departments are Department of Science and Technology, Department of Biotechnology, Department of Scientific and Industrial Research, Department of Atomic Energy, Department of Space, Ministry of Earth Sciences, Defense Research and Development Organization. Indian Council of Agricultural Research (ICAR) also added in the list vide omno. F. 2042-2021 PPD PT. Dated 24.09/2021. 30. Rules and orders contained in the respective departmental regulations and by other special orders applicable to them. Rule 135-2 Ministry or department shall put in place, as far as possible, empowered project teams for all large value projects, and these teams should be tasked only with project execution and not given other operational duties. Rule 136-1 No works shall be commenced or liability incurred in connection with it until I. Administrative approval has been obtained from the appropriate authority in each case. E. Sanction to incur expenditure has been obtained from the competent authority. E. A properly detailed design has been sanctioned. While designing the project's ETC, principles of life cycle cost may also be considered. IV. Estimates containing the detailed specifications and quantities of various items have been prepared on the basis of the schedule of rates maintained by CPWD or other public works organizations and sanctioned. Weak funds to cover the charge during the year have been provided by competent authority. We. Tenders invited and processed in accordance with rules. We. A work order issued. Rule 136-2 On grounds of urgency or otherwise, if it becomes necessary to carry out a work or incur a liability under circumstances when the provisions set out under sub-rule 1 of Rule 136 cannot be complied with, the concerned executive officer may do so on his own judgment and responsibility. Simultaneously, he should initiate action to obtain approval from the competent authority and also to intimate the concerned accounts officer. Rule 136-3 Any development of a project considered necessary while a work is in progress, which is not contingent on the execution of work as first sanctioned, shall have to be covered by a supplementary estimate. Rule 137 For purpose of approval and sanctions, a group of works which forms one project, shall be considered as one work. The necessity for obtaining approval or sanction of higher authority to a project which consists of such a group of work should not be avoided because of the fact that the cost of each particular work in the project is within the powers of such approval or sanction of a lower authority. This provision, however, shall not apply in case of works of similar nature which are independent of each other. Rule 138 Any anticipated actual savings from a sanctioned estimate for a definite project shall not, without special authority, be applied to carry out additional work not contemplated in the original project. Rule 139 Procedure for execution of works. The broad procedure to be followed by a ministry or department for execution of works under its own arrangements shall be as under I. The detailed procedure relating to expenditure on such works shall be prescribed by departmental regulations framed in consultation with the accounts officer, generally based on the procedures and the principles underlying the financial and accounting rules prescribed for similar works carried out by the Central Public Works Department (CPWD). E. Preparation of detailed design and estimates shall precede any sanction for works. No work shall be undertaken before issue of administrative approval and expenditure sanctioned by the competent authority on the basis of estimates framed. IV. Open tenders will be called for works costing Rs. 5 lakh to Rs. 30 lakh. Limited tenders will be called for works costing less than Rs 5 lakhs. Execution of contract agreement or award of work should be done before commencement of the work. Final payment for work shall be made only on the personal certificate of the officer in charge of execution of the work in the format given below. I. Executing officer of name of the work am personally satisfied that the work has been executed as per the specifications laid down in the contract agreement and the workmanship is up to the standards followed in the industry. Rule 140 For original minor works and repair works 31. Entrusted as per Rule 1332 or Rule 1333, the administrative approval and expenditure sanction shall be accorded and funds allotted by the concerned authority under these rules and in accordance with the delegation of financial power rules. The public works organization or the public sector undertaking or any organization allotted work shall then execute the work entrusted to it in accordance with the rules and procedures prescribed in that organization. A memorandum of understanding (MOU) may be drawn with public works organization or the public sector undertaking for proper execution of work. Rule 141 Review of projects. After a project costing Rs. 100 crore or above is approved, the administrative ministry or department will set up a review committee consisting of a representative each from the administrative ministry, finance, internal finance wing and the executing agency to review the progress of the work. The review committee shall have the powers to accept variation within 10% of the approved estimates. For works costing less than Rs. 100 crore, it will be at the discretion of the administrative ministry department to set up a suitable mechanism for review and acceptance of variation within 10% of the approved estimates. 32. Ch. -6 Procurement of goods and services. Procurement of goods. Rule 142. This chapter contains the general rules applicable to all ministries or departments, regarding procurement of goods required for use in the public service. Detailed instructions relating to procurement of goods may be issued by the procuring departments broadly in conformity with the general rules contained in this chapter.